Welcome, Stock Explorers, to another deep dive. Today, we're diving headfirst into Coursera Inc., ticker symbol COUR. Now, this isn't just another online learning platform, It's a company right at the heart of the AI revolution. They're actively shaping what the future of work looks like.
That's right.
And, well, spoiler alert, their recent financial performance, it's been nothing short of transformative.
Indeed. And our mission with this deep dive is really to understand Coursera's evolving business. We want to map out its strategic position in this, well, incredibly dynamic landscape.
Yeah.
And highlight the critical elements any potential investor, or frankly, anyone interested in the future of education and work, should be thinking about.
Okay.
So we'll be dissecting their recent remarkable financial turnaround, exploring their compelling AI upskilling thesis, assessing their surprisingly robust financial health, and finally, pinpointing the key milestones to watch moving forward.
Okay, let's unpack this then. Why Coursera? What exactly happened that has this company suddenly capturing so much attention, especially right after their Q2 2025 earnings?
Well, it really comes down to that quarter.
Because what they just delivered wasn't just a good quarter. It felt like a landmark quarter, right? Their Q2 2025 financials, they didn't just meet expectations. It felt like they shattered them.
He really did.
It marked such a decisive break from, a history where the market often reacted with a bit of skepticism. This wasn't just a beat. It was like comprehensive across every single metric that matters.
It truly was a standout performance. Let's look at the numbers for a second. Coursera reported revenue of $187.1 million for Q2 2025.
Okay.
It's a robust 10% year-over-year growth. And importantly, it surpassed analyst estimates by over $6.5 million.
Wow.
On a profitability side, their non-GAAP adjusted earnings per share, or EPS, came in at $0.12. Now, for those maybe less familiar, non-GAAP adjusted just means they've filtered out some one-time charges or accounting quirks to give a clearer picture of core operational profitability.
Right, the underlying performance.
Exactly. And this $1.12 figure, it exceeded forecasts by 0.03 cents. That's a pretty significant 33.3% surprise.
That is significant.
And what's even more telling, I think, is that this marks their fourth consecutive quarter of beating both EPS and revenue estimates. It really signals a highly disciplined management approach that, the market is finally recognizing and, frankly, rewarding.
Yeah, consistency matters. And it wasn't just the past quarter that impressed, was it? I mean, the forward-looking guidance seemed to really ignite market sentiment. What exactly did management project that fueled such an immediate, jump in confidence?
That guidance was absolutely pivotal. Management raised their full-year 2025 revenue outlook by a substantial $17 million.
Okay.
So the new range is between $738 million and $746 million. They also increased their annual adjusted EBITDA margin target to a very healthy 8.0%.
Right. EBITDA earnings before interest, taxes, depreciation, and amortization. A key measure.
Exactly. A key measure of operating performance before those non-cash expenses. And for Q3 2025, their projections are also notably above what analysts were expecting, projecting continued momentum. So this wasn't just a one-off good quarter. It was a strong signal of confidence in their trajectory.
So beyond just hitting the numbers, what operational improvements are actually underpinning this fantastic performance? It sounds like the business itself is becoming incredibly efficient.
The operational excellence is, it's clear across the board. Adjusted EBITDA, as we just mentioned, grew an impressive 73% year over year to $18.0 million.
73%?
Yeah. And free cash flow, or FCF, a truly critical metric, it's the actual cash a company generates after all its expenses and investment.
Like they can actually use.
Precisely. That increased by 68% to $28.6 million. That makes it the company's strongest quarter for cash performance ever.
Wow.
Gross profit also saw significant growth, up 14% year over year to $102.7 million. And crucially, this outpaced revenue growth. That indicates expanding margins across the platform.
That's key. Better profitability on each dollar.
Exactly. And on top of all that, their net loss narrowed by a remarkable 66% year over year. It shows a clear, accelerating path towards actual profitability.
That's a huge improvement. But let's talk about the learners themselves. I mean, what's happening with user growth and platform engagement? Are people still flocking to Coursera?
Absolutely. And in record numbers, actually, Coursera welcomed 7.5 million new registered learners just in Q2.
7.5 million.
Yeah. That's the largest quarterly addition they've seen since the sort of pandemic-driven boom back in 2020. It really brings home the scale of this current growth.
Right.
And this surge brings their cumulative total to a staggering 183 million registered learners as of June 30th, 2025. That's up 18% year over year.
Incredible numbers. And was this growth concentrated in one area, or was it balanced, like consumer versus their enterprise business?
It was incredibly balanced, which I think is a key indicator of overall platform health and market reach. Both their consumer and their enterprise segments grew revenue by an identical 10% year over year.
Okay, same growth rate.
Exactly. This synchronized growth, coupled with improved gross profit margins in both segments, really suggests a rising tide lifting all boats within Coursera's ecosystem. It's not just one part carrying the load. It feels like platform-wide strength.
Okay, so here's where it gets really interesting for me. The market's reaction. I mean, we're talking about a 28% to 36% stock surge immediately after earnings.
Yeah, it was huge.
That's such a sharp contrast to previous negative reactions, especially after their Q3 2024 report when the stock actually fell.
Yeah.
From your perspective, what was the tipping point? What caused such a dramatic reevaluation by the market this time?
That shift is just undeniable, isn't it? The market had seemingly lost some trust, I think, in management's ability to forecast and deliver, especially after a kind of confusing guidance cut back in Q3 2024.
Right, I remember that.
So this Q2 report, with its undeniable beat across the board and that confident guidance, it just shattered that skepticism. It wasn't just about the numbers themselves. It was about management proving they could execute and deliver predictable, strong results. This Q2 report effectively reset expectations and I think forced a fundamental reevaluation of Coursera's potential.
Okay, so with that remarkable financial turnaround established, the big question becomes, what's the engine driving this renewed momentum? Many point to Coursera's bold bet on artificial intelligence, a strategy that really seems to set them apart. It feels like they're providing the picks and shovels for the entire AI revolution, doesn't it?
That's a perfect analogy, actually. The core investment thesis here is, it's simple, but incredibly powerful. There's just massive global demand for AI literacy and skills. The World Economic Forum, for example, projects something like 59% of the global workforce needing reskilling by 2030. That's not just a trend. It's almost an existential necessity for businesses and individuals. It creates this multi-trillion-dollar market that Coursera is uniquely positioned to capture. It really is like selling shovels during a gold rush, but for intellectual capital.
Right.
And Coursera is stepping up. They've aggressively expanded their content, now offering over 925 generative AI courses from top partners. That's a threefold increase in just the past year.
Wow.
And what's truly fascinating is the acceleration in enrollments for these courses. They're seeing about 12 enrollments per minute now.
12 per minute. That's incredible demand. But what's fascinating to me here is how Coursera is building its moat, its competitive advantage, not just with content, but with proprietary AI tools. This isn't just a platform about AI. It's a platform powered by AI. How are they doing that?
Precisely. And that's key. Their flagship AI innovation is something called Coursera Coach. It's an interactive, AI-powered tutor. It actually won the 2025 Newsweek AI Impact Award. It's already been embraced by 2.6 million learners, engaging in something like 36 million message exchanges. And the data shows it not only improves quiz pass rates by about 10%, but crucially, it seems to help historically underserved groups achieve better outcomes, which helps bridge educational gaps.
That's powerful.
Beyond the learner experience, they're using AI behind the scenes, too. Things like AI-assisted course building, which they say can reduce content development costs by up to 70%.
70%? That's huge for margins.
It is. And to truly expand globally, they've implemented AI translations into 26 languages and even voice dubbing in 5, including Indonesian. Apparently, the Spanish dubbing is showing really strong engagement in Spanish-speaking markets.
So we're seeing a true virtuous cycle here, then. AI tools attract learners. Those learners generate tons of data, and that data refines the AI tools, making the learning experience even better. It sounds like a self-reinforcing loop.
It absolutely is. And this cycle is fortified by two other critical competitive differentiators: their premier partnerships and their strategic use of data.
Right, the partners are key.
Definitely. They boast over 350 leading universities and companies, think Stanford, Google, IBM, AWS, providing trusted, branded content, and importantly, verifiable credentials. This makes their certificates highly valuable in the job market.
Yeah, that credential matters.
It really does. Furthermore, with 183 million learners, Coursera possesses this unique, massive data set. This data is an increasingly powerful asset. It fuels personalization, content recommendations, and refines their AI models, making it very, very difficult for competitors to replicate.
And it seems like new leadership is really putting the pedal to the metal on this AI innovation. Who's at the helm driving this?
Without a doubt, the CEO, Greg Hart, joined in February 2025. He brings a wealth of experience, a 23-year tenure at Amazon, where he actually led the development of Amazon Alexa and Echo right from the beginning.
Oh, wow. Okay, so direct AI product experience.
Exactly.
Yeah.
His background is directly relevant to building and scaling AI-based consumer products. And he's also made strategic C-suite appointments. He brought in Patrick Supank as Chief Product Officer and Grant Parsamian as Chief Data Officer. It signals a definitive focus on product innovation and leveraging data as a core competitive advantage. This leadership team really has the expertise to double down on AI.
It really sounds like a perfect storm of opportunity aligning for them. But, every investment has risks. What are the potential challenges? What are they highlighting in their public filings? It can't all be sunshine and roses, can it?
No, it certainly isn't, and it's important we acknowledge those. Coursera's public filings do highlight risks. For instance, AI itself could potentially displace demand for some of their existing offerings if skills become obsolete faster than Coursera can adapt its content.
Right, the pace of change.
Exactly. But I think a perhaps more immediate challenge is the high cost of developing and maintaining these sophisticated AI tools. That requires continuous, significant investment. And of course, there are the legal, regulatory, and reputational risks. Ensuring their AI models are unbiased and accurate. That's a huge reputational tightrope to walk these days. It's not just about building the tech, it's about building it responsibly.
Absolutely.
And a key question for investors, I think, remains whether this strong demand for AI upskilling will translate into sustained, accelerated growth in their high-margin enterprise segment, their net retention rate, or NRR, which indicates how much revenue they keep from existing enterprise customers.
Right, after churn and upgrades.
Exactly. It currently stands at 93%. Now, that's good. But the real question is how much it can accelerate from here, driven by this AI demand. That's what the market wants to see.
So in a way, AI presents this kind of dual-edged sword, but arguably one that makes Coursera's business model more countercyclical. Demand for upskilling persists whether the economy is strong or weak, right? That seems like a powerful argument.
That is a compelling argument. In a strong economy, companies need to upskill their workforce to stay competitive, to innovate, to retain top talent.
Sure.
In a weaker economy, individuals feel compelled to invest in reskilling themselves, to enhance their job security, or find new opportunities if they face layoffs. The sort of existential pressure from AI's impact on the global labor market creates this powerful, almost non-discretionary demand driver. It acts as a consistent tailwind, potentially making Coursera's revenue streams more durable and predictable over the long term, regardless of economic cycles.
That's a really interesting point. Okay, let's shift gears slightly and talk about Coursera's financial strength beyond just the recent quarter. Because when you look at their balance sheet, it really stands out. I think you called it a fortress balance sheet.
It genuinely is a fortress.
Yeah.
Their capital structure is exceptionally robust. As of Q2 2025, they had over $775.1 million in cash and cash equivalents sitting there.
Over $750 million?
Yeah. And what's even more impressive, and actually quite rare for a growth company like this, is that they have absolutely zero debt. None.
Zero debt. That's huge.
It provides them with significant strategic flexibility. It insulates them from capital market whims, allows them to self-fund their growth, maybe even pursue strategic acquisitions if they wanted to. Some investors have even pointed out that this cash balance represents nearly 40% of the company's entire market capitalization.
Wow.
Which highlights a potential valuation disconnect. It suggests the market might not be fully appreciating this financial strength yet.
And their free cash flow, which you mentioned earlier, hitting a record, it isn't just positive. It seems to be accelerating dramatically. How does that change things?
Oh, it fundamentally alters their investment profile. It transitions Coursera from what some might have seen, perhaps unfairly, as a cash-burning tech firm, into a genuinely self-funding, profitable growth enterprise.
Right.
And that shift naturally broadens their appeal significantly to different types of investors.
And that leads to that incredibly undervalued argument you sometimes hear, and even speculation, maybe just speculation, about Coursera as a potential buyout target, doesn't it? Given that cash and strategic position.
Precisely. Their consistent growth, that fortress balance sheet, accelerating profitability, and clear market leadership in such a critical sector, it makes a compelling case for being potentially undervalued relative to its long-term prospects. And, yes, The strong cash position and strategic importance in the future of work certainly make them look like an attractive acquisition candidate on paper for larger tech firms or perhaps private equity. Though, to be clear, there's no concrete evidence of any such discussions happening.
Like pure speculation.
But the market looks for cash flow, and Coursera is now generating it consistently and increasingly.
Okay, let's broaden our view now to Coursera's place in the wider market. How are they being perceived? How do they stack up against the competition? And what are the bigger industry trends at play here?
Yeah, looking at the competitive landscape, Coursera differentiates itself pretty clearly, I think. If you compare Coursera versus, say, Udemy.
Right, another big name.
The fundamental difference is Coursera's curated, partnership-based model. Remember, they offer content from over 350 leading universities and companies. That provides trusted, verifiable credentials. This selective approach, the brand recognition of their partners, it justifies a premium price point.
Makes sense.
Udemy, by contrast, operates more like an open marketplace. It offers a much broader catalog, sure, but generally less formally credentialed content. It's more about breadth, perhaps specific skills. Coursera is really focused on depth, accreditation, and career outcomes.
And it's such a powerful case study when you compare Coursera to Chegg, isn't it? AI seems to be actively disrupting Chegg's business model, while it appears to be accelerating Coursera's.
That's a critical, almost textbook example, really, of how AI can impact different business models in completely different ways. Chegg, which is primarily a homework help service, has seen its core model directly challenged by free generative AI tools like ChatGPT.
Yeah, students can just ask the AI now.
Exactly. Students can often get answers instantly without paying Chegg. Coursera, on the other hand, sells structured learning pathways, and those verifiable credentials, the kind of skills and certifications that AI enhances the need for rather than replaces. They're embracing AI as a growth catalyst for learning and credentialing, not seeing it as the threat, providing shortcuts. This stark contrast really underscores Coursera's, I think, superior strategic positioning in the AI era.
Definitely.
And beyond that, the broader MOOC massive open online course industry is projected to grow incredibly fast. We're talking something like a 39.2% compound annual growth rate, potentially going from around $31.7 billion in 2025 to nearly $166 billion by 2030.
Wow, that's explosive growth for the sector.
It is. And Coursera aligns perfectly with the key trends driving that growth. Micro-credentials, AI-powered personalization and learning, growing corporate adoption for employee training, and generally a pretty favorable global regulatory environment that supports online learning initiatives.
That's a huge addressable market they're playing in. So with all this happening, what about Wall Street and Main Street? How are analysts and retail investors reacting to Coursera's story now after this big quarter?
Well, the shift in sentiment, especially after Q2, has been really remarkable. Post-earnings, Wall Street saw several notable analyst upgrades. Bank of America, for instance, moved their rating from underperform all the way up to neutral, raising its price target to $12.
Okay, an upgrade, but still neutral.
Right. And other firms like Morgan Stanley and Cantor Fitzgerald also raised their targets. However, you do still see some cautious, neutral, or equal weight ratings out there. It reflects, I think, a bit of a wait-and-see approach. Analysts want more conclusive evidence of sustained accelerated growth, particularly in that key enterprise segment NRR we talked about. They want to see these positive trends continue for several more quarters before maybe getting more aggressive.
Okay, so Wall Street is warming up, but maybe cautiously. But retail investor sentiment seems to have just exploded sometime. Quite a contrast, isn't it?
Oh, absolutely. It was night and day. We saw something like a 5,500% surge in message volume for Coursera on platforms like Stockstowatch in the 24 hours right after the earnings release.
5,000%.
Yeah, and sentiment just flipped to extremely bullish. This was clearly driven by that powerful AI upskilling narrative, the idea of the certification moat we discussed, and of course, that undeniably strong balance sheet with all the cash and no debt.
Sure.
There were probably also some short squeeze dynamics at play. Short interest had actually increased a bit before earnings, and that massive stock surge likely forced some short sellers to cover their positions, adding fuel to the rally.
Right, technical factors too.
Definitely. And we also saw really aggressive options activity. There was something like a 1,341% increase in call options being purchased, which underscored this bullish anticipation among traders. It really implies Coursera is becoming, an AI story stock, which is great for visibility, but also means potentially higher volatility ahead, something you, as an investor, should definitely be aware of.
Good point. High expectations can lead to big swings. So, as we look to the future then, What are the key milestones? What should we be watching for that would indicate Coursera is continuing on this positive trajectory?
Yeah, there are a few key things. We'll definitely be watching for continued strong or ideally improving net retention rate in the enterprise segment. Seeing that NRR climb steadily towards or even above 100% would be a huge positive signal. Sustained acceleration in overall user growth, particularly in the higher value professional certificates and degree programs, will also be key. We also want to see more evidence, more data on Coursera Coach's impact on actual learner engagement and outcomes. Is it really translating to higher course completion rates, better job placements, those kinds of metrics?
Got it.
And, of course, just successful execution and integration of the new leadership team's strategic initiatives, especially around deploying AI effectively across the platform and maybe even in future M&A. And this really raises an important question for you, the listener, to consider. Will the market continue to re-rate Coursera based on these strengthening fundamentals and the powerful AI narrative? Or is some of this recent surge perhaps just a bit of exuberance fueled by the broader AI enthusiasm washing over the market? It's likely a balance and something to think about.
Absolutely. So to summarize our deep dive into Coursera, their landmark Q2 2025 performance, their validated AI-centric strategy, those fortress-like financials, and the strong new leadership team seem to have fundamentally re-rated the company in the eyes of many. It's truly an exciting, maybe pivotal time for them as they capitalize on this massive global shift towards AI upskilling.
Indeed. And maybe a final thought for you to mull over. Consider how Coursera's unique position, using AI not just as a topic, but as a tool to bridge the global skills gap, might make it one of the most resilient and, frankly, important companies in the coming decades. Potentially quite insulated from typical economic cycles because that need for skills just keeps growing. That's a powerful long-term thought for anyone looking at the future of work and investment.
Absolutely. A really compelling angle. This has been a truly insightful deep dive, and we really hope you found it as valuable as we did exploring Coursera. If you enjoyed this analysis, please make sure to subscribe to Stock Explorers, give us a like, it really helps, and activate those notifications so you don't miss any of our future deep dives into interesting companies. We'll see you next time.